Morning, good afternoon, good evening, depending on where you are in the world. Colleagues and fellow champions of inclusive finance, believers in the power of small business to transform economies and society. I'm incredibly excited to be addressing you at this 11th Financial Inclusion Week, and I feel really honored to have been asked to address the topic of accelerating small business resilience in emerging markets. It's something that I'm very passionate about. As I talk about this topic, I'm always conscious about the paradox that we face because on the one hand, small businesses are really celebrated for their grit and their resourcefulness. And, at every major conference that you go to, we're talking about them as major contributors to job creation with good reason, right? Because in most economies, they account for probably north of 70% of jobs created, north of 50% of GDP. And certainly in an emerging market context, we see that they demonstrate, I'd say, superior adaptability compared to their developed market counterparts. The paradox is that they are still very poorly supported and they remain the most at risk during major events like economic downturns, pandemics, natural disasters, and so on. And this is something which worries me, right? Because when we look at the current reality, certainly in the African context, we know that Africa will contribute half of the new global workforce. And yet we're only creating 3 million jobs against a 15 million requirement. We also know that Africa's older population will reach 235 million by 2050. All of this will create this sandwich generation. What does this have to do with small business, you might be asking? Well, small businesses are our jobs engine, and they're the most likely employer for these younger, possibly less skilled workers, and also for older workers who may require a longer work life and more flexible work. I think today what we really need to think about is, as inclusive finance innovators, operators, policymakers, how do we make the small businesses more resilient in what is, I think it's fair to say, an increasingly turbulent environment? What I wanted to do in the few minutes that I have today is explore 5 ideas. It's an invitation for us to reflect and think about ways in which we can intervene. So the first idea is beyond access to finance. I realize that the finance gap is real, right? In Africa alone, I think we're looking at upwards of 330 billion in terms of the small business financing gap. But what I would put forward is that we kind of know what to do. We know that we need to create more pathways for small businesses to access funding. We're seeing banks now being complemented in the market by digital lenders. We're also seeing market catalysts coming into the market in the provision of credit. We've evolved traditional scoring models and introduced alternative data scoring using various types of transactional data and AI. There's room to grow, but we can kind of bank those learnings. And we've also come to understand that channel diversity really matters for small businesses, right? We want to try and approach them directly. And in some cases, human touch and some sort of branch network is important. But we also see increasingly that embedded finance has a major role to play because we meet the small businesses where they are, be that on gig platforms, on e-commerce platforms, on payment platforms, where they're already doing their daily activities. This channel diversity is something which I think providers are increasingly investing in. So that's good in terms of access to finance. But when I say beyond access to finance, I believe that as providers, we need to start thinking about what else is hampering small business resilience. What do they need access to beyond lines to credit, right? We know that small businesses need access to markets, otherwise they face concentration risk. We know that they need access to inputs at a reasonable cost because their buying power is usually constrained. So how can that buying power be improved? We know that they need access to tools that lower their running costs. We know that they need access to more visibility on the macro. This is an area that's starting to get more attention and investment. If we look at businesses like the Complete Farmer platform, they're not just doing agri-finance, they're also looking at inputs and markets. At Lula, where I serve on the board, they've also given the small businesses access to tools like cash flow management and so on. This is an area that requires a lot more investment, because we are seeing within the small business space a rapid adoption, right, of digital tools. If you look at things like social commerce, a lot of times people think small businesses are not yet that sophisticated. And yet you see so much happening in the social commerce space. You see small businesses automating their workflows in WhatsApp. I think that we have no excuse. We have to innovate where the customers are. So that's the first idea. Linked to that idea is the second, right, which is the need to continue to invest in both competition and collaboration. This is really important for us to ensure that the solutions we're putting in front of small businesses remain context responsive. So we all accept now, I think, that small businesses are not homogenous, right? Their needs vary because they have differing formality levels, differing maturity levels, differing sizes, sectors, specific issues. With that, we need more players in the field. We've seen various models coming into play from MNOs with fintechs and so on, banks working with various market catalysts to bring new products to market. But I think we always consistently need to guard against the temptation to kind of solidify the playing field. We need to constantly ask ourselves, even as we are thinking about regulating, whether we're prematurely keeping out new players. We've seen, I think, in contexts like Brazil and South Africa, which are huge emerging markets, when new players come in, they can completely revitalize a sector, right? We saw this with the entry of neobanks like Nubank and TimeBank and so on, to ensure that small businesses continue to get the very best products and that innovation continues at pace. The third idea is around optimizing the small businesses cost stack. Small businesses, although we laud them and say that they are so amazing, continue to face an obscenely expensive cost stack, right, which needs a complete overhaul. Most of us think about costs that small businesses face when it comes to access to finance, and that's true. We need to continue to work on those costs. Some of them have come from information asymmetry in the past, which to some extent alternative data models and AI help to solve. Some of those high costs have come from cost of distribution, which digital models tend to solve because they're lower cost to acquire and cost to serve. And some of that expense has also come from the cost of capital. We need to ensure that we're crowding in maybe private sector capital to be sure, but also local currency capital to solve that issue. But beyond that, small businesses face very high costs when it comes to operations, right? Their input costs are extremely high. Some of the compliance requirements that may be put on them in certain sectors are extremely expensive. As we think about recommendations that we put forward, to the extent that we're able to in our various roles, this is something that we need to continually be putting front and center. It's not just about cheaper access to loans. We need to really look at the total cost. I mean, in some markets, when you look at the cost for a business to formalize and meet their various statutory requirements, it's just completely impossible for small businesses. Recently, a couple of the larger African markets have wanted to bring the creator economy of small businesses into the tax net. And when you look at what is required for people to be compliant, it's just too much. And I think what will be required here is for the fintech providers, for instance, to really think about, are there streamlined solutions that can allow people to effectively deal with these statutory requirements? And I think this kind of more expansive way of thinking about how value is delivered and how that cost stack is optimized is definitely key to building SME resilience, because all of these costs are, especially when they're unexpected due to changes in tax policy and so on, can be incredibly detrimental to small businesses. So the fourth idea is really around infrastructure as an input for small business resilience. We have spoken at length in many forums around the importance of infrastructure like road, rails, shipping, telecommunications, connectivity, and so on. And we all understand that for some small businesses in agri, for instance, they face a lot of challenges around the cold chain and food waste and so on, and that the right infrastructure would be incredibly important for them in kind of enabling market access and helping them to be resilient. So we can bank that. But I think two other bits of infrastructure, which perhaps in the context of small business haven't received as much attention, is firstly policy as infrastructure. I've kind of touched on this, earlier in the talk, but just to bring it all together, policy certainty creates confidence, and confidence attracts investment, right? So if we want small businesses to be able to thrive, it's really important that we have a policy environment that gives a lot of certainty. We also need a policy environment where industrial policy is well aligned with what it is that we are promoting small businesses to do. And I think one of the challenges is that often small businesses do not have line of sight of some of the macro issues and ways in which operating in a certain environment may not have longevity. So if someone is operating in retail, for instance, they may not be aware that there's a competitive threat around the corner from an Asian e-commerce player who will wipe them out of business completely. There is a role here for ensuring that that information flow is there, but also that the industrial policy in terms of where the tax incentives, etc., is also where small businesses are being encouraged to build and operate. The other piece of infrastructure is really energy. I think that it's been very encouraging in the past while to see the work that's being done on electrifying, the remaining 600 million Africans who remain unconnected, right? And a lot of this is under the umbrella of Mission 300. What we haven't spoken a lot about is how this aligns to each market's strategy for small businesses. We can see in research that's been done by various parties, Power for All, for instance, that small businesses being electrified, rural businesses, is the most productive use of this infrastructure that we could focus on. This is something which, as we all go about our planning, we can kind of try and push front and center. The last idea that I want to talk about is how we think about small businesses as owners in the green and tech economy. If this is the next frontier, as we're transitioning into this greener data-led economy, one of the things I'm increasingly worried about is to what extent many small businesses will be completely displaced, to what extent fragility will be created, right, for small businesses, especially for people operating in the customer protection space. This is something which requires attention. An example of this is we understand that the SME data forms their pathway to funding, right? So their digital footprint has broader value. So we're talking about their transaction histories, customer relationships, things they invent, their operational patterns, etc. All of these things are being fed into various platforms, turned into scores and products and so on. What perhaps we haven't thought of in the SME context is how do they maintain some ownership? All of these data-fueled tools are fantastic, but how do we make sure that they don't end up in some walled gardens where these small businesses, which I've already said are very cost sensitive, end up with really onerous subscriptions which they actually can't support, right? Or that some of the work that they've done, they're unable to earn future revenues from it. We need to think about that in design, the interoperability and transferability of this data. More broadly, we need to think about what role can SMEs play in this emerging green and data-led tech economy. Do we really want them to only be consumers? Where could they be embedded in the value chain? Because these are economies which promise to be higher margin. And if we accept that small businesses are the biggest employers, surely we would want them to be a part of that. So those are really the 5 ideas that I wanted to share around building SME resilience. And I think a way to think about everything that I've shared is that we can think about resilience as bounce back. And what is bounce back really? Bounce back is about retained energy and retained potential. The ideas that I've shared today are ideas which allow small businesses to retain energy in the sense that they increase their productivity and their profitability, and they allow small businesses to expand their potential because they talk about ways in which we can improve external conditions, infrastructure, and other protections so that these small businesses can thrive. I think I'll leave it here. We have a clear roadmap. We have a huge opportunity, and certainly for their part, small businesses are helping us. They're a key ingredient into our collective resilience, right? The ball is really in our court to make sure that we honor the contribution that they are making by acting decisively in the areas where we know that we can have the greatest impact in helping them to thrive. So I'll leave it there. Thank you.